As always, wonderful and beautiful, glorious day it is. Ladies and gentlemen, this is the day the Lord has made. Let us all rejoice and be glad in it. Absolutely. It is a super Saturday. Absolutely, it is. It is October 12th, 2024. All right. Pepper, please. Please, baby. Thank you. Even though I know it's going to continue. But, all right, this is the weekly trade watch list on YouTube. All right, all right. Let's see what's up. Gonna go over the gold trades that were taken this past week. All right, got some down here. All right, got these gold trades that were taken this week. So, so what happened with this is we knew that it was going to be an accumulation. Okay, we knew that the market moves in market price cycles. Market price cycles. Depending on the type of trader you are, you have to understand what type of cycle the market is in. Now, you're probably thinking, okay, what do I mean by market cycles? Chill. What do I mean by market price cycles? You got to understand that the market moves in market price cycles. So, for instance, just to give you a quick update or a refresher, the market is doing an up. Say this is doing an uptrend, right? The market moves in market price cycles, and it's according to the Wyckoff method. So, if I have book readers that's on this live right here, uh, no, I do not get any type of compensation for recommending these books. It's just for people who want to take their trading seriously and take it to the next level, who are very detailed and structured. These three books that are by the same author. Okay, these three books that are by the same author. All right. So you have book number one, which is Trading and Investing for Beginners, right, by Ruben Villahermosa Chavez. Okay, that's book number one. Book number two is The Wyckoff Methodology in Depth, How to Trade Financial Markets Logically. And on the back, it says Trading and Investing with Common Sense, also by Ruben Villahermosa Chavez. And then book number three is Wyckoff 2.0, Structural Volume Profile Order Flow, also by Ruben Villahermosa Chavez. What he did in this book is just simply take the market price cycle and take the Wyckoff market price cycles, and he took an indicator called the volume profile, and he screened it over the market price cycle. That's it. But I'm a naked chart trader. I don't trade with indicators. Me pulling a volume profile indicator, like for instance this, um, you'll come over here, you'll search, and not that that's not the volume. That's not the right volume. That's not the right indicator. So let me do away with that. Uh, come back here, search. There we go. First of all, I can come over here and just remove it. All right. So this is the volume profile indicator right here. All right. That's the volume profile indicator, and it lets you know in the third Wyckoff book that I mean not the third Wyckoff book, but it's the second Wyckoff book, but the third book that I showed you, this one, it talks about this volume profile indicator. It's very knowledgeable. I understand it, but the thing about it is, I don't want to be trading with all of that. That's just me. I don't want to be trading with the volume profile indicator on there. What's up with it, bro? My bro RTC is on the live with me. We're gonna be looking to trade in gold this upcoming week. We are gold traders, so that's what the Wyckoff 2.0 book is about. Is this volume profile indicator and be able to trade the Wyckoff market price cycles. Okay, so what I'm gonna do is simply take that off because yeah, I'll simply take that off. So, but here's the deal. So you're probably thinking, man, how did you know? How did I know that the market was going to go bullish from here? Okay, there's several reasons. So the market moves in market price cycles. You have 9 different time frames from the monthly all the way down to the M1. Okay, and the market is a trend with inside of a trend, with inside of a trend, with inside of a trend, with inside of a trend. That's why you have 4 different types of traders. You got uh, scalpers who don't go higher than the 15. Scalpers do not go higher than the M15. Okay, then you have intraday traders who will be basically looking no higher than a 1 hour time frame. You got swing traders who are looking at the what H4 in the daily. Okay, and then you got position traders who are normally looking at monthly and weekly. All right. So the market moves in market price cycles. The market moves in this sequence. Doesn't matter if it's a uptrend or downtrend. The market will accumulate, then go up. It'll reaccumulate, then go up again. It'll reach a premium, get a distribution, redistribution, and then it'll do what? Accumulate, reaccumulate again, break a structure. Okay? That's what the market does. All right? Now, you know that the market prints in those market price cycles that'll keep you more disciplined and in tune with the market. Okay? You know what to expect by what was previously printed. And when you see an engulfing candlestick, when you say bullish or bearish engulfing candlestick, you know that's an imbalance. You know that the market price cycle is complete. It doesn't matter if you're looking at it on a smaller time frame. You know that the market price cycle is complete. Look at this. So right here, even on the daily, you have what? A reaccumulation. What came out of the reaccumulation? An engulfing candlestick. The engulfing candlestick shows you that, hey, we're completing this cycle. Doesn't matter if it's a bullish or bearish engulfing candlestick. Right here, bullish engulfing candlestick. It's showing you that, hey, we're done completing this reaccumulation right here. Boop. That is key and clutch to know. So when you'll know when you'll be able to where you're ready to take a trade. These engulfing candlesticks are saying that the cycle is completed. It's saying that the cycle is completed. Doesn't matter what the time frame is. It doesn't matter the time frame. Yo, speaking of going off subject, but this candied rainbow, clear American for 79 cents at Walmart, it's dope. It's carbonated water, clear American. It's dope. Called candied rainbow. All right, so let's get into it. So let's talk about the trades that were taken this past week. All right. So here's the deal. On the H4 time frame, since I have it marked on there, you see that the market created a redistribution. You can see this bearish triangle in between here, right? We can see this entire thing, this bearish triangle in between here. So this could be like this. Oh, hold up. This whole entire deal, excuse me, not only is this area a redistribution, but this whole entire deal is a redistribution triangle. You can see how the bearish triangle, it was going from this low to this high, this entire triangle. So in order for the market to go bearish out of that big gigantic, out of these 2 blue trend lines right here, in order for the market to go bearish, what must happen internally? The market had to do what? Distribute right here, create this smaller redistribution, and go down. You see what I'm saying? Because look at this engulfing candlestick. That's the breakout of this redistribution. The smaller one right here is also representing this big gigantic redistribution. Okay, so here's the deal. What's the next market price cycle that has to be printed after a redistribution? What is the next market price cycle that has to be printed next after a redistribution is printed? What is the next market price cycle that has to be printed after a redistribution? Once you see that bearish triangle, okay, you know who got to come in now. When it's all said and done, when the chicken come out the grease and it's ready to be served, who got to come into the market? Who got to come? Who got to come back to the market? Nobody knows. Once we have that bearish triangle, absolutely, accumulation. And accumulation comes after a redistribution. The market has to accumulate again. The buyers, absolutely. Absolutely. So it's not a matter of if, it's a matter of when and how are they going to appear in the market. How are they going to appear? They can appear in a variation of different ways, right? So in this particular instant, the buyers decided to do what? Create this low, create a high. Let's go to the 1 hour time frame, look at it. So you can see, let's see if it did it on, yeah, you can see it a little bit. You can see it on H4. You can see how this market probably diverged a little bit from this wick to this wick. Like this, let's see if it's showing it on the RSI. Yeah, you see it? So this is slanting lower and this is slanting upward. That's that accumulation. That's key. That's the accumulation. So now, say for instance, you would have taken buys right here and you would have swung it, right? You would have swung it. Now, where would have TP1 would have been? Where's the first opportunity if you're trading off the H4 time frame? Where's the first opportunity that the sellers have in order to do what? Block this bullish attempt. Right here would have been TP1. This zone right here would have been TP1. This area right here, this engulfing candlestick, the zone right here would have been TP1. So as soon as the bottom, as soon as the market would hit this wick, if you're swinging, you would went ahead and close 50% partials, stop loss goes to break even, and you let the rest overall ride. So now guess what? Since the bears didn't come in here off of this level, right? What's the next possible logic opportunity that's going to happen? Is probably price is going to want to do what? Break this old high and create a new one. Because you see everything else, LTTL, look to the left, you see everything else, every supply zone has been mitigated, has been touched, has been refilled. Every supply zone has been refilled except this one. So now that the bulls broke past that, right? What has happened? What has happened? Let's see. Let me show you. So how do we know that this is going to go bullish? The market diverged. This area right here was a change of character. This last low high was a change of character. And the market did what? After it changed character right here, it came back and retested the accumulation or reaccumulation down in here before it went bullish. On this, this was a news candle. It was news induced. But the fact that even though that particular candlestick was news induced, it still doesn't affect that the market is going to go bullish. Does that make sense? That's key. That's real key. If you sit there and watch like the fundamentals of a pair, okay, cool. Let me anticipate where this market is going to go, bullish or bearish. And I'm not talking about you actually taking the trade. I'm just saying mentally taking the trade. So I got taken out on that particular trade on that particular candle. I was in a trade for maybe about 30 to 40 pips in profit, and I did not check news. I skipped. It was unintentional. I skipped one of my steps in my trade plan because I would have, number one, if I had gotten that trade, I was in profit, I would have put my stop loss at break even. My stop loss would have been at break even, and then so I couldn't lose the trade because at times news may come out and bless your trade. So once I'm in the market, I do not take myself out. I let the market take me out the market. All I do is just use proper risk management and I close partials. I close partials once, and I'll let the overall rest ride to a 10% take profit. I let the market always take me out. I don't want to be the one to make the decision to keep money on the table. All right. So we had trades based off the M5 and M1. Okay. And so when you understand what the higher time frame needs, you'll be able to ping pong trade all of this in between here while the higher time frame is printing a big gigantic accumulation. There's nothing stopping you from coming down here internally on the lower time frame to take buys and take sales. Nothing at all. Nothing at all. All right. So got in for these buys like right here on this particular trade. When market broke structure up above here, took partials, right? And obviously, you know the way I trade, I go for 10% based off my entry and my stop loss. Obviously, this one here break even. The rest of the remaining volume here break even, right? Came back and took me out. So here's the deal. This particular trade right here, it was counter trend, right? This was counter trend. So what I noticed right here is what? We're on the M5 on gold. Right here was a supply zone, right? What is the duty? What is the primary function and duty of a lower high in the market? The primary purpose of a lower high in the market is to do what? Break the old low and create a new low. Does that make sense? The primary purpose of a lower high is to smack a supply zone, create, and go down and break the old low and create a new low. The purpose of a higher low in the market is to do what? Find a demand zone, create the higher low, go back and break the old high and create a new one. At times, it's not going to happen. Okay, it's not going to happen all the time. And in this particular example, it didn't. So you have what? This engulfing candlestick, which is what? Solidifying that, okay, this is an engulfing candlestick that broke this structure and broke below. It is solidifying that that is a supply zone. Okay? The market came back and did what? Diverged, changed character, it accumulated, reaccumulated, came back to the supply zone. The seller said, hey, we're going to sell again. Distributed, redistributed, and it did this lower high did not break this low and create a new low. What happened? The market came back into a demand zone, right? And the bulls said, okay, cool. You distributed, redistributed, and bam, this engulfing candlestick created the accumulation. Tap up, chill. This engulfing candlestick is the symbolism of the accumulation. Think about it. If you have an accumulation, if we had on the H4 time frame, we have that accumulation, right? We have that accumulation. Just imagine on a time frame higher than maybe the monthly. Let's go look at it on the monthly. We have on the 4-hour time frame this entire accumulation. On a higher time frame, it's going to be one candlestick. It's going to be one candlestick on a higher time frame. Look at the daily. Look at this. You see what I'm saying? Bullish engulfing candlestick right here. Bullish engulfing candlestick right there. So once you understand price action, you'll be able to keep yourself more disciplined. Okay, if I'm looking for the bulls to come in, right? If I'm looking for the bulls to come in right here, right, off this level, okay, cool. It's going to show me. The market is absolutely readable. It's going to show me when the bulls want to come in. I don't have to be trigger happy. It's going to show me. It's going to show me engulfing candlestick. It's going to show me some type of dragonfly doji, which is a long bottom wick rejection. Okay, some type of signal is going to be obvious that the that the bulls are going to come in the market. It's going to be obvious. Okay, so and it's don't ever take a trade. And I'm talking to you, talking to me. Don't ever take a trade while the candlestick is cooking. I have this saying in this mnemonic: close of the candlestick gives you confirmation. Close of the candlestick gives you confirmation. So it keeps you extra disciplined. Because I mentally, and I had the discipline. I was in the Walmart parking lot, and I was looking at Bitcoin, and I was looking at it on between the M5 and M1 time frame. I'm looking at it, I said, okay, cool. If this candlestick were to break this low right here, I'll take the trade. And it was still cooking. The candlestick was still cooking. It wasn't confirmed. And so I said, you know what? I'm glad I didn't take the trade. Because I actually went to my platform, Sway Charts, opened up the chart, had Bitcoin, had the lot size set and everything. But then I'm looking at it. I said, you know what? I'm not going to do it. I can wait till Sunday, or I can wait till tomorrow or Monday to trade. So that's the discipline that kicked in. So here's the deal. This showed the presence of the buyers, this engulfing candlestick in the demand zone. Boom. Okay, I got the accumulation. I got the reaccumulation. That does what? Break this structure and create a new high. So now internally, we're bullish on the M5. We're bullish on the 5-minute time frame, but we're bearish on the M15. That's what you could say. Because technically right here, what do we have? A low, high, a high, low, lower high, lower low. So we are bearish on the M15, but we are bullish on the M5. That's what I'm going to start incorporating into my trade plan now. What trend is on what specific time frame that you have? So the lower the time frame, the faster the trend changes for that time frame. The lower the time frame, the faster the trend changes for that time frame. That's why a lot of people don't want to trade the M1 time frame, because they don't understand, or it's too confusing for them. But the M1 time frame, the lower the time frame, the more setups you have. Why go to a higher time frame and wait hours upon days for a setup when the same exact stuff prints on a lower time frame? You have to understand where you are in the market. Based off what the higher time frame needs to print, you knew that after this redistribution, I knew an accumulation had to be printed. So it's going to take a hell of a long time because it's on the H4 time frame. But guess what? While it's cooking, I can take it for buys and sales. And that's what absolutely happened. Right? So here's the deal. In this particular example, right, the market is low right here, created a lower high. This lower high was supposed to do what? Break this low and create an old low, but it didn't. Went back bullish. So now we are what? Low, high, higher low, break a structure, higher high. We are bullish on the M5, but we are still bearish on the M15. Okay. Now here's the key. Here's the key. You see how the market broke the structure right here, right? You see the market created a what? A reaccumulation right here. What's the next market price cycle after reaccumulation? What's the next market price cycle after reaccumulation? What's the next market price cycle that needs to be printed after reaccumulation? Absolutely. A distribution. So, the seller's coming in, right? So, here's the deal. You see this bullish triangle coming into a supply. Oh, damn, man. I'm getting ready for a bearish divergence and change of character. I'm getting ready for what? A distribution. So, we go to the M1. We go to the M1, right? And look at this. Right here on the M1, And I'm gonna pull up the RSI. Here's your what? Divergence. Right here is your change of character. Now, why? I'm gonna help you understand and read the M1. Right? Now, me been studying Wyckoff over 2 years. That's what these abbreviations are Wyckoff events in a distribution schematic. So right here, preliminary supply. Right here, buying climax, automatic reaction, secondary test, minus sign of weakness. It tapped into a demand zone and it went up and did what? Accumulated. And see, here's the deal. I have this thing where I say, hey, if the bearish impulsive move didn't overtake the last bullish impulsive move, I'm not taking the trade. Once the bearish, if it's the first bearish impulsive move that overtakes the last bullish impulsive move, I'm never taking it. Why? Because that is a change of character, and a change of character does not determine a change of trend, but a break of structure shows the continuation in the trend. All right. So here's the deal. What happened? Market diverged, created a gravestone doji right here, right? And it did what? This was an area of interest where the buyers should have came in because the market did what? Accumulated, reaccumulated, broke the structure, created a new high. But I understood that the sellers had to come in because why? The market just printed a reaccumulation on the M5 time frame. The market just printed a reaccumulation on the M5 time frame, right? So that means it has to create a distribution. It has to create the sellers. And this is a supply zone. So guess what? We go here. So guess what? I didn't take this sell, the first drop right here, because here's the deal. You have to let the market diverge and change character. One or two things are going to happen after it. So this market diverged, as you can see, and it changed character right here, right? Bearish change of character. What causes the market to have a bearish change of character internally? You have a distribution, redistribution that causes a bearish change of character. Now here's the deal. You notice from this high to this low, no supply zones were mitigated. So after the change of character, right? If the market wants to truly go bearish, it'll come back and form a lower high. Okay. So here's the deal. This is what happened first. We took the buy first. We took the buys first. So here's the deal. This first move right here, this first leg right here, we didn't take the buy because it's just standing on one leg. That is not confirmed that what? The buyers are getting ready to take over the market. That didn't confirm anything to us. That one bullish leg right here, because guess what? What it did was this. The market came what? To a supply zone, created a lower high, and this lower high could have possibly did what? Distributed, redistributed, broke this low, created a new low. But guess what? Same thing as it happened back here. Same thing that happened back here. This lower high did not lead to a what? A new low. Same thing that happened right here. This lower high did not lead to a new low. So how do we take confirmed buys? The market showed that it wanted to go bullish from here, and as soon as it broke this high, we did a buy market execution. We did a buy market execution. Why? Because success leaves clues, but so does the market. You have this, when the market created a bearish change of character, the market is supposed to immediately go back to this zone if it wanted to be what? Bearish. But it hit a demand zone. So now my buy is switched. The market hit a demand zone. I need to be looking for buys. Stop looking at what the market did and what it done, and look at where the market is doing and where it's currently at. That's where you take the trade based off of where the market is currently at. So you wouldn't take a trade, you wouldn't look for sales in a demand zone. You wouldn't look for buys in the supply zone. Look at the clues left in the market. Look at the clues left in the market. Now here's the deal. You got some people that would have done this because they're so anxious. They would have done this. As soon as the market broke this low, they would have did it. Oh, we're going to sell. Where's the stop loss going to go? More than likely, it's going to go way up here at the up thrust. Why? The market broke a low. What two market price cycles need to lead? What two market price cycles need to be printed in order for a bearish change of character to be the result? What two market price cycles need to print in order for the effect to be a bearish change of character? What two market price cycles in order need to print? What leads to a bearish change of character is the question that I'm asking. What two market price cycles in order need to be printed? Absolutely. A distribution and redistribution leads to a bearish change of character. So in this instance, in this example, when the market created a bearish change of character, I'm not going to sit up here and be looking for sales beyond that bearish change of character. I know the buyers are going to have to come in at some point in time, because what led to this bearish change of character, it was a distribution and redistribution that was printed. So guess what? The two selling market price cycles have already been printed. I need to prepare my mind for buys. So guess what? The buys were not confirmed until the market broke above the structure. Because like I said, this could have been a pushback into a supply zone, which it was, and you had this bearish engulfing candlestick. The sellers came in, but on the lower time frame, on the second time frame, you'll see a distribution, redistribution into a demand zone. Here goes the accumulation, reaccumulation, breaks the structure up above. Boom, buy market execution. The stop loss go right below the last accumulation low, which is this level right here. That's why the stop loss is right here. But guess what? We knew that it was a possible opportunity for the sellers to come in right here. So guess what? This area right here was TP1, and partials were taken, and stop losses at break even. So that was the buy opportunity I can't lose on. The buy opportunity is safe. Okay? Buy opportunity is safe. The buy opportunity is safe. So now I'm no longer managing the buy trade. Now I have allowed myself, because I've already paid myself 50% from the buy entry, and my stop loss is at break even, I'm gonna let the rest ride to my overall 10% take profit. Okay. Now I have allowed myself to be able to take a hedge position. A hedge position is just a trade in the opposite direction. So I'm already in here for buys, and I got in here for sales. Okay. Why? Because here's the deal. What leads to a bullish breaker structure? In lower time frame, what happens? The market accumulates, reaccumulates, causes a bullish breaker structure, and creates a new high, right? So guess what? I knew the market was possibly going to sell from here based off the evidence it had printed right here. You can see the what? You can see a reaccumulation right in between here. You can see this bullish triangle in between here, bullish channel. So guess what? The sellers had to come in here. It's not a matter of if, it's a matter of when. So guess what? We're waiting for the distribution. What? The buyers still pushing it back up, create new highs. Buyers came in, what? Still to the demand zone, create new highs, and boom, there go the sale. You knew it was coming. Look at the divergence. Look at it. Slanting upward right here. Slanting upward on the candlesticks. And if you don't know by now, a distribution high and accumulation low is market structure. The reaccumulation and redistribution that gets printed in between is not market structure. Okay, so boom, that's the slanting upward, slanting lower. Boom, what happened? Oh, that means this is a change of character. Okay, that means this is a supply zone that can do what? Future sellers could reappear right here. But this one turned out to be a what? A 1 to 10. So guess what? When the market came to this area right here, which is the reaccumulation area, which is the first area of interest that the buyers have an opportunity to take over, boom, close 50% partials. Excuse me. Close 50% partials. All right. Soon as you have if you're in a trade for a sale, the first chance and opportunity that the buyers have to come back into the market is the reaccumulation cycle. So you want to take partials and immediately go to break even, because you want to put some respect on the market name. You don't want your trades to be ego driven. Okay, and my trades were ego driven. Not gonna even cap. My trades were ego driven. I'm keeping it a buck. So right here, I took partials at this imbalance. That's why. See, look. That's why you have an engulfing candlestick. Is because it's showing you that is what finished the reaccumulation. We're completed with the reaccumulation. We're going to create an imbalance. That's what the imbalances show you. The imbalances show you that it's a creation. It's a completion of a market price cycle. It's a completion of a market price cycle. That's what the imbalances show you. Look at this distribution. What happened? Boom! Imbalance. Completion of a market price cycle. This imbalance right here. Boom! Completion of the reaccumulation. That's what it shows. Okay? So now partials were taken right here, right? And then stop loss was at break even. And I let the overall rest ride to what? A 10% reward, which is what? You see it right here. I'm hovering over it right here. Right? So then look, the market did all this. Boom. Diverged. Change character right here. Now I'm telling you, if you don't understand how a market prints, you're thinking that this market is about to go back bullish. But guess what? It already smacked off of this reaccumulation right here. Now you got the big gigantic reaccumulation on the M5, but it smacked off of this reaccumulation. And then guess what? The market came back to this accumulation zone right here and had everybody thinking that, oh yeah, we're going back bullish. But guess what? Once the market diverged and changed character right here, it didn't go back to the imbalance that caused the change of character. It was just a retracement. Diverge, change of character. Now here's the deal. You could have been looking for additional sales. Why? Because a high was broken. This is the liquidity that was swept. A high was broken. Look at this. We got the market doing what? Tapping into a demand zone, accumulating, reaccumulating, breaking this high, right? So you knew the sellers had to come in at some point in time. It's just a matter of when they show up and how are they going to appear, because they appear in different types of situations. And this is a funny looking distribution right here. All right, and then what happened? Distribution, redistribution, breaks the old low, forms a new low, and then bam, TP hit. That's why I don't ever take myself out of the market. Come to the reaccumulation, close 50% partial, stop loss goes break even, and then let the rest ride, Clyde. Okay? Let the rest ride. Now here's the deal. You see this? The market distributed, redistributed, broke this low, created a new low, right? You can see this redistribution right in between here. So what's the next market price cycle after a redistribution? An accumulation. So you see this accumulation. This right here is a what? Bullish divergence. And right in between here is the change of character. This is slanting lower. On the RSI is going to be slanting upward. Look at it. You see? Right? I can move this now. It's on H4. So bam. Divergence, change of character. Now here's the deal. How did you know that this wasn't going to go bullish at this time? Because after the change of character, the market created a what? A reaccumulation and continued to go up to a supply zone. It's what I call a double stagger. The market was on one leg like this. After the change of character, after the bullish change of character, the market was on one leg like this. It decided not to come back to the accumulation or reaccumulation that caused the bullish change of character, created a larger reaccumulation, and then it went up again. Now it's on what? It's really imbalanced. You got two back-to-back imbalanced, unmitigated demand zones going into a supply zone. The market showed you that it did not want to go bullish. It showed you right here, imbalance. Okay, that's the change of character. Reaccumulation, another imbalance. We have no demand zones mitigated going into a supply zone. Think about it. Truly think about it. Right there, I have no demand after the change of character. I have no demand zones mitigated going into a supply zone. Why would the Bulls want to do that? Truly and honestly, it happened that way because the market was in a retracement. The market wasn't ready to go bullish just yet and change trend. Does that make sense? And these are the clues that the market leaves on every single time frame. Every single time frame. So look, what do you have right here? What did the market do? Diverge. Now here's the deal. Remember I said that I want a bearish impulsive move to overtake the last bullish impulsive move? Boom. Never take the first one. Want to know why? That's the change of character. Look at this. This is the divergence. This is the change of character right here, right? The market changed character. And so what I would have been waiting on is this. Now that the market changed character, because here's the deal. Let's go back to the bulls. If you simply would have caught a buy right here at the change of character, you'd have been in so much drawdown. I mean, you'd have had a stop loss way down here, right? And now your TP has to do what? Your TP has to be equivalent or more to what your stop loss is. But why would you want to be in a buy at a high? A bullish change of character just happened. Why would you want to do a buy market execution? You need to start preparing yourself for the possible sale. You want to take a buy at a low and you want to take a sell at a high. So right here in this example, why would you want to sell? Why would you want to do a sell market execution once this impulsive move broke right here? Why would you want to do a sell market execution right here and then the stop loss be way up here? Let that first impulsive move play out, and guess what? The market's going to do one of two things. When it diverges and it changes character, it's either going to come back to the supply zone or the redistribution or the distribution that caused the change of character, and it's going to give you a selling opportunity because it's created a lower high, or it's going to diverge and change character, and it's not going to worry about it. It's going to leave it unmitigated, and it's going to create a redistribution, and then it's going to go into a demand zone, and then you'll be looking for the buy. Does that make sense? That's why I say let the market, when it creates that impulsive move, that first one, and it shows you the first instance that the sellers may want to take it, let it diverge and change character. You're not missing nothing. Either the market's going to come back and create a lower high in a selling position, or it's going to create the higher low in a buying position, or the market's going to diverge and change character and it's going to keep on going, and it's going to leave it unmitigated, which means more than likely it's going to get taken out. Make sense? Make dollars? So let's show you the other trade that I took, the other 1 to 10 that was taken. So right here, this one was almost a 1 to 10. So this sell happened. So look right here, what do you have? Market create a low, accumulated, reaccumulated. Here's your divergence. Here's your change of character. Boom, you got an imbalance, distribution, redistribution, no supply zones being mitigated into a demand zone. Here it goes, accumulation, reaccumulation, breaks this structure, create this high, distribution, imbalance, which means on the second time frame, the market diverged, change character, redistribution into a demand zone, boom, accumulation, reaccumulation, break a structure again. And now guess what? Market broke this structure. It's not a matter if, it's a matter of when do the sellers come in. So you see how the market is refilling these imbalances, demand zones? Okay, cool. Bet. Boom. Demand zone mitigated. Okay, cool. Right now, you still have no what? You have no bearish impulsive move overcoming the last bullish impulsive move. So bam, you're looking at it. And so right here, right here is where it happened. Look at the imbalance. It's imbalanced for a reason, right? Look at the imbalance. Boom. You got to change the character. You do not have to take this move. Remember, the close of the candlestick gives you confirmation. Okay? So when this candlestick closed down here into a demand zone, you shouldn't have been looking for no sales. Right here. So why, if this closed down here into a demand zone, you shouldn't have been looking for no sales. If your entry would have been right here, oh, we're going to sell right here, and my stop loss is going to be way above here in this high. Now, guess what? Look how much drawdown you in. And it didn't have to be. All you have to do is be patient. Be patient. Let the market diverge and change character. It's going to give you the opportunity. It's going to let you know what it wants to do. It's going to come back to that supply demand zone that causes change of character, being the distribution, redistribution, or accumulation, reaccumulation, or it's going to change character. It's just going to keep on going, which means it turns out to be in a retracement. So guess what? This one actually turned what? It changed trend, right? Created this low right here, right? Off of this what? Demand zone. But this higher low didn't have enough juice to do what? Break above here and create a higher high. Here come the sellers. Boom! Sell market execution. Soon as the impulsive move broke past this green candlestick, boom! Sell market execution. Stop loss right above the lower high, and let it ride. And let it ride. This was almost a 1 to 10. Obviously, this turned out to be a break-even trade. Partial was taken. Absolutely partial was taken. So this turned out to be a break-even trade. No, it didn't. Let me see. No, TP got hit on this one. TP got hit on this 10R trade. Okay. But this confirmed buy was taken. This wasn't a 10R trade. This one got taken out at break even. So I was in the sell, took partials, 50% partials. Okay. Now I had confirmed buys come in, took the buy. Right here is the redistribution, which is the what? The first area of interest where the sellers can come into the market. So partials was taken right here on the buy for TP1. And then now I'm in a sell at break even, partials taken. I'm in a buy at break even and partials taken. That's how you're utilizing the market's profits against itself. Okay. And so now obviously you can see how the buy entry ended up doing what? Being taken out at break even, and the what? The 10R trade played out for the sale. All right. And so yeah, this nasty spike right here, I got in for a buy entry right here, and the news came out and then big gap. So I am starting over at $152 this week. $152 this week. Creating new forms of discipline as far as I am not going to be trading if I'm not in my office. I spoke with this with my bro Ron. So now here's the deal. This was a buy entry that was taken. Okay. Now, right here, how did I know when the buyers were ready? How did I know when the buyers were ready? It's two key things. How I knew when the buyers were ready. Okay. So here's the deal. The market created this high, right? Distribution, redistribution, boom. Accumulation, reaccumulation, right? Here we go. So now the market diverged, bullish divergence, change of character, low, high, higher low, internally break the structure, goes to break the structure, create a new high. Bears got to come in, distribution, redistribution, came off of this level. The buyers came in, did not end up creating a new high, right? Didn't have enough juice. Sellers came in, right? Boom. So here's the opportunity for the buyers, because this is a reaccumulation, for them to push back up. They didn't have enough juice. Here's the supply zone. Here's your sale. Boom. Distribution, redistribution, distribution, redistribution. And what did it do? Break this old low and create a new low. So now it's not a matter of if, it's a matter of when. Right now we're at, I use a baseball analogy, we're at 3 balls and 2 strikes. So the Bears got to come in. We had 3 balls and 2 strikes, so now the Bulls got to come in. Does that make sense? Bulls don't have to come in right here at the reaccumulation. Bulls don't have to come in at the accumulation, but if an old low is broken and a new low is formed, okay, we had 3 balls and 2 strikes. Now the batter got the swing. Does that make sense? Now the batter has to swing, or you gonna risk doing what? Striking out. We had 3 balls and 2 strikes. It's called a full count in baseball. Now the batter has to swing, which means if you a type of person that, hey, I only want to take the sales when an old high is broken, or I want to take the buys when the old low is broken, you can absolutely 100% do that. That could be a part of your trading plan. I only take sales when an old high is broken because I know they have to come into the market. I only take buys when an old low is broken because I know they have to come into the market. It's not a matter of if, it's a matter of when by then. Because, like I said, the redistribution, sellers don't have to come in off of that. The sellers don't even have to come in off the old distribution. But if an old high is broken and a new high is formed, they got to come in. When an old low is broken and a new low is formed, the buyers got to come in. So guess what? When did I do the buy market execution on this trade based off in one time frame? Okay. You can see how this market did what? It accumulated, reaccumulated, smacked some type of supply zone, distributed, redistributed, broke this low, create a new low. Here you go to accumulation, reaccumulation to a supply zone, distribution, redistribution, break this low, create a new low. Now here's the deal. The market came back to this redistribution. First area interest for the what? The sellers to do what? Push the market back down, right? First area interest for the sellers to push the market back down. What happened? The bulls broke through. Right here, they was battling, right? But I seen this. I seen that impulsive move, the bullish impulsive move, breaks above the last bearish impulsive move. So right here, retracement is not confirmed that the bull's about to take over. Pushed up, boom, I got the supply zone. Want to see if the seller's going to come in. They didn't. It blew past it. Boom, buy market execution. Let's go. I know the bull's about to show up now. That was confirmed. The sellers didn't come in and stop it right here. It was confirmed. So guess what? This area right here is the redistribution, right? So guess what? Partials were taken right here. Stop loss goes to break even. And we let the rest ride to the overall 10% TP. Look what happened. 1 to 10. Yeah, 1 to 10. 1 to 10 plus. Look at this. That market from this buy right here with that stop loss rolled all the way up here. And why? The thing about it is this. Had we looked from the higher time frame perspective, knowing that a 4-hour accumulation has to be created and it's going to be a long-term bullish trade, we would have simply taken that trade like this and we would have been up here. I believe I looked at it. Me and my bro Ron looked at it. And that's based off of my entry stop loss criteria. This would have been a 1 to 34, a 34% trade on gold. 34%. You want to look at it? Look. Market went up about this high. 1 to 35. A 1 to 35 with that small what? Scalp entry. A scalp entry that turned out to play what? Intraday. Because if you understand what the higher time frame needs to print, okay, I know long term I'm looking for buys because the 4-hour just printed a gigantic redistribution. So I know long term is going to go bullish. So had we been looking at that, then guess what? We could have taken this with pride, taken our partials, and let this ride high, knowing that at least minimum to where? At least minimum to where? This supply zone right here. This redistribution supply zone right here. And guess what? Possibly this low leading to what? The breaker structure of this old 4-hour high and creating a new one. Yes, indeed. Makes sense, doesn't it? All right. So I'm gonna have to log off. Normally we would look at Bitcoin, but I'm already past my time. I have to log off. Um, so I was just drawing this up, just mentally taking trades. You see how the price diverged, the change character right here. The market respecting demand zones, breaking structure. Okay, breaking structure, reaccumulation. Okay, look at this. Boom, change of character right here. So then you would have did what? Oh, let me zone this out right here to see if the market's gonna come back and hit it. So we did what? Distribution, redistribution. The market breaks an old low, right? The market breaks an old low and creates a what? A new low. So where's your mindset program now on Bitcoin? Okay, short term, we looking to go bullish. We looking to go bullish. Not just yet though, because it's got to create a what? A bullish divergence. And what is you got an LTTL look to the left? What is the possible next possible area where it can create a bullish divergence? Right here is reaccumulation. So this is possible. So let's see. No, but this thing could be a what? A big gigantic distribution. Look what you have right here on the H1, right? Know what the higher time frame has to print. Okay, so you got this high that led to what? Distribution, redistribution, broke the low, led to a new low. Okay, accumulation, reaccumulation right here. So now you're gonna have to do what? Eventually you're gonna have to distribute. So now it looks like what? Look at that. You see how this is slanting upward? Let me show you before I log off. You see how this is slanting, this wick to this wick is slanting upward like this. All right, and then on the RSI slanting lower. Told you, bearish divergence, aka Wyckoff distribution. So now we're looking at the elements of a what? A Wyckoff schematic, distribution schematic. So what I'm looking at is this. This being the upthrust, price came down here, sold from right here. So now you could be looking for this whole entire thing to create a what? A change of character. And see if it's going to come back to the supply zone that caused a change of character, or is it going to do what? Distribute, redistribute, come to this demand zone, then you can look for buys from here to buy it back. It doesn't matter. You don't miss a trade. You don't miss a setup. You don't miss a trade. Right? I appreciate each and every one of you for taking time out of your busy schedule to listen to what I have to say. It is always greatly appreciated. I would never ever take it for granted. Have a safe, blessed, productive rest of your Super Saturday. Know that I love you. And as I always like to say, God created us on purpose to fulfill a purpose. So what purpose are you willing to fulfill? And don't be one of many. Be the one. What do I mean by that? Be the one that's going to create a schedule. Be the one that's going to be disciplined in your trading. Be the one that's going to journal your trades. Be the one that's going to be a professional trader. You know what professional traders do. Okay? Don't be one of many. One of many is everybody want to stack trades. Everybody want to if you're going to be in a trade more than one position, let them all be confirmations. Let them all be confirmed trades. Oh yeah, I'm taking this buy with pride. I'm taking this sell with pride. You know what I'm saying? You got to capital preserve in order to capital gain. All right. If you simply want to become a part of my Telegram trading community and the trade signals chat, it is absolutely for free. It is going to be listed in the description below. Also, I have 4 links that are going to be listed in the description below. First link is to the leading U.S. regulated broker that I use that's allowing us to create these phenomenal trades with very, very low spreads. That has a built-in digital trading journal interface so that you don't have to manually take trades anymore. There's a choice now. You also have the platform also tells you how much you are risking before you even click the send order button. Before you even enter the trade, it gives you the projection of what you can gain and what you can take a lesson on. The percentage of the account and in pips and in dollars. Okay? So it shows you if you're about to risk 0.5%, 1%, your stop loss is 1% based off of your entry, and the stop loss price that you're about to put in, you're risking 2% of your account on this trade. It tells you all of that before you even enter the trade. And based off the stop loss price you're going to put. Okay, and based off the TP you're gonna put, how much you can gain. Um, Also, you can draw up and use technical analysis on your sway charts. And what you can also do is create. You don't have to create multiple demo accounts anymore. Unlike MetaTrader 4, you have to create multiple demo accounts if you're practicing, and you're like, oh, I messed up. Let me create another demo account. So I find myself doing the same thing. But now, what you can do is, say if you have a $10,000 demo account, and say you took a lesson on $50, right? You can take that 9,950 that you had in your account now, and you can go back and just click in and add the deposit back. You can add the demo money back and take it back to 10,000. So you don't have to create multiple demo accounts anymore. Unless you create one account for scalping purposes and one account for swinging purposes, something like that, then yeah. But if you just want to use one demo account, you messed up. Oh, let me start all over my demo. Okay, cool. Account went down to 9,950. Add the $50 back. Add the $50 back. All right. So you have the leading U.S. regulated broker that's also got the prop firm. If you're interested in doing prop firm challenges, that link is also in the description on the live video. What they have is this. They have a 3 different types of ways you can do prop firm challenges. They got the consistency rule, okay, but then you have the option to do no consistency rule, and you can just do the regular. You can just do the regular phase 1 and phase 2. Also, they have a promo code going on right now, all caps, fall 15. You'll get 15%. You get a 50% discount off of your purchased prop firm challenge. Okay, get 15% discount fall 15. Let's see what else going on. Oh, and how I know Sway has the answers and they're legit because you have other prop firms that I can rattle off the top of my head. I know the most recent one was Karma Prop Firms. Karma Prop Firm. They Sway ended up buying them out. They ended up joining together with Sway, and there's a couple of more prop firm companies that Sway purchased and bought out, and they joined and linked in with Sway because Sway has answers. All right. So what happened was that MetaTrader lost its MetaQuotes licenses sometime last year, and the programmers for Sway said, "You want to know what? We're gonna have people be able to draw up on Sway, mark up their charts on Sway, and also trade off the same platform." Because what a lot of people do is they draw up on TradingView, but they place their trades with a different broker. And now the reason why I stick to TradingView because that's what I was learning from. It's a bigger screen. I can see it better and things of that nature. That's just my preference. That's just my preference. There's nothing against withdrawing up on Sway. It's just the fact that you got to switch to multiple windows. But absolutely love the platform. It shows you in your trading dashboard. It shows you in your trading dashboard the total net profit loss, that your average daily net profit loss for that day, your average winning trade holding time, your average winning trade losing time, and it shows you your win rate, and it shows you the max drawdown. And yeah, and it also keeps a whole track of the instruments that you traded that day, and it shows you your average risk to reward ratio as well. All right, so love it, absolutely love it. It has the one click trading feature. Has the one click trading feature. Now here's the deal: when you come over here to live account, all you have to do is you can click the drop down arrow and then switch it to demo. You don't have to go out of the platform and log into the demo account manually. All you gotta do is click the drop down arrow where it says live account, and you can swap it to your demo. Okay. So also the Telegram links, it says trading community. It says trading community in the description below, and it says trading signals. Download Telegram on your Google Play Store, on your App Store. Come back to one of my live videos, and what you'll see is in the middle, which is link number 2 and link number 3, trade community, trade signals. Add yourself to the chat, and once you add yourself to the chat, I'll give you a warm fire introduction and welcome and edify you and let everybody know, hey, y'all welcome Jane Doe, who's embarking. Give Jane Doe a fire or lit IOD welcome. She's embarking on the journey with us to becoming a consistent, profitable trader. And everybody will come out and say, "Hey, welcome, Jane. Hey, welcome, Jane. Congratulate you on making the decision to be able to take, your income into your own hands. The highest paying skill set that requires no degree and just a decision. The most highest paying skill set that requires no degree and just a decision. All you got to do is switch the D words. No degree, but a decision. And you come here and learn it for free. In the Telegram chat. I go live on Zoom 5 to 6 times a week. There's a weekly schedule that already been put out. It's Monday, Wednesday, Friday, 4:30 a.m. Central, 5:30 a.m. Eastern. And on Tuesdays and Thursdays at 9 a.m. Central, 10 a.m. Eastern, 7 a.m. Pacific Standard Time. And Monday, Wednesday, Friday, the Pacific Standard Time would be 2:30 a.m. Pacific Standard Time. And we're on there at least a minimum of an hour. Sometimes it gets stretched to 2 because we vibing so much and we learning so much. All right. So love you all to life. Looking forward to a profitable week. Let's be disciplined and watch our account grow. And then what we're going to do, withdraw some of that money, take it to the bank. All right. Your withdrawing has to have a purpose. Okay. And then if you haven't withdrawn, we're going to help you do a withdrawal. And your first withdrawal is going to be a belief check. It's going to be a belief check. Right now, you're not going to believe it until you withdraw it. The thing about it is, think about how I just made money with my mind. I didn't bother anybody. I didn't hammer anybody. Nobody was annoyed. All I did was be patient, and I was able to print money with my mind. How powerful is that? Okay. I'll see you all next time. I'll be live, not on here. Next time I'll be live on here is next Saturday. Next time I'll be live, period, is going to be Monday morning. All right. Love you all to life. Y'all take care.